Welcome to weekly view on markets. Markets closed lower after a volatile week, and all the gains during the week was wiped out on Friday. Volatility index has gone up by 17% for the week, despite overhang of geopolitical tensions in the Middle East. Buying was seen at lower levels Friday also. We need to watch out for developments in the Middle East. There may not be a big correction in the markets unless a full scale war breaks out. Quarter one results of the companies are good so far, and markets is supported by liquidity from domestic institutional investors. Any correction will be short lived as investors are waiting to buy at lower levels. Existing investors should not panic and exit in a hurry. They should remain invested to get benefit from the Indian economic growth and strong macroeconomic fundamentals of the economy. Now let us look at indices levels. Nifty closed at 24,707, lost 117 points. It was lower by 0.47% for the week. Bank Nifty closed at 51,350. It gained 54 points for the whole week and closed with a gain of 0.11%. Mid cap index gained about 145 points, closed at 57,913. Small cap index lost 54 points, closed at 18,800. While mid and small cap indices lost heavily on Friday, but for the whole week they were almost flat. The volatility index, that is India Wix, has gained about 16.9%. It is up. It is at 14.32. So rising volatility and sharp correction on Friday has dented the investors' sentiment. But will it result into a big correction? We have to look at the developments in the Middle East. And if the troubles escalate, then we may see a short-term correction. Otherwise, the market may stabilize here. And there were equal number of sectors gaining and losing during this week. Energy sector law gained about 2.53%. Pharma, media, public sector index, healthcare all gained about 1%. Healthcare commodities, oil and gas all gained from zero point 0.6 to 1%. Realty lost about 3%. IT index auto lost 2 to 3%. FMCG, metal and PSU banks lost around 1 to 2%. The advancing and declining stocks were more or less equal. This is a chart of Nifty index. On this daily chart, we can see that Nifty has given a big correction on Friday. It is the last red candle. And if the correction continues, Nifty has got good support at around 24,250 levels. So if Nifty comes to these levels, it is a good buying opportunity. This is the chart of Nifty Mid Cap Index. Mid Cap Index has closed with a green candle which looks like a doji. The doji indicates that the bulls and bears in the market are equally poised. In case mid cap index falls further, it has got good support at around 55,200 levels. This is the chart of Nifty small cap index. The small cap index also gave a kind of small body and big upper and lower shadows. So this also shows a kind of indecision or equal strength of bulls and bears in the market. And small cap index may take support at this level, or it has got further good support at around 18,500 levels. This is daily chart of Bank Nifty index. Bank Nifty index has shown better strength on Friday, and all other indices were falling. And it has got good support at around 51,200 levels, and next level of support is at around 50,500. If Bank Nifty falls at around 50,500, traders can looking at buying Bank Nifty index. Now let us look at economic fundamentals of the market. Macroeconomic fundamentals of Indian economy continues to be strong. RBI forex reserves is at 667.38 billions. It is down by 2.47 billions for this week. Forex rate is at 83.75 rupees per dollar. Dollar index is at 103.22. Brent crude price has surprisingly come down. It is at 77.56 dollars per barrel. Despite the escalation in tensions in Middle East, the crude price has come down. Gold price is at 69,445 for 10 grams, 24 carat. The demand for gold has been coming down in recent weeks. Foreign institutional investors have sold 12,756 crore during this week, and domestic institutional investors have bought 17,226 crore in equity during this week. On Friday also, DIIs have bought while FIIs have sold, and DIIs have used lower levels in the market to buy on Friday. Core sector growth for the month of June has come at 4% against 6.4% in the month of May. So this is on a large base, and there is not much to worry on this core sector growth. Still, 4% is considered as a good growth. Tepid auto sales have come in for the month of July 2024. Car sales were generally down around 9%. Two-wheeler sales were up by around 7%. Commercial vehicle sales was down by around 18%. Tractor sales were up by around 4%. The point is that commercial vehicle sales has been coming down should be a worrying factor. Generally, the commercial vehicles sales indicate the industrial activity and transportation and logistics activity. So we need to watch out for the commercial vehicles. Further escalation in tensions between Israel, Hamas, and Iran also being drawn into it. So whether this will result in a full-scale war is to be watched. So this will have a impact on the markets in the coming week. Monsoon is widespread, and monsoon is progressing well across the country, which is good, will help in agriculture sector and the rural growth. Quarterly one results so far have been good, and markets are supported by lot of liquidity the DIIs have got, and this is the reason I believe that there may not be a big correction unless there is a full-scale war. Investors should not get panic. They should not worry and remain invested because of the strong macroeconomic fundamentals and growth in Indian economy, they will get good returns in the long term. So investors should not panic and they should remain invested. This is all for this week. If you like my video, please subscribe to my channel. You can ask your questions and refer to your friends. We'll meet again next week. Thank you.